Have you ever wondered why trading futures and options feels like such an impossible mountain to climb? You know, why so many really smart people jump in, but so few actually make consistent money? Well, today we are going to rip the Band-Aid off and look at the real reason why. And here's a hint. The biggest battle you're fighting isn't with the market. It's actually happening right inside your own head.
All right, let's just start with the one number that says it all, 89%. According to the latest exchange data, that's how many individual traders in the F&O market lose money. Just let that sink in. That is a staggering number. And it tells you right away, this isn't just a string of bad luck, something fundamentally is going on here. But what does that loss actually look like in real terms? Well, on average, each one of those traders in that 89% loses 1.1 lakh rupees every single year. Now, that's not just a small hiccup. That's a serious financial hit. So when you put these two numbers together, nearly 9 out of 10 people losing over a lakh a year, the picture becomes crystal clear. For most folks, F&O is a losing game. So why? What is going on? The answer, and this is really the key, isn't about having a faster internet connection or more complicated charts. The real fight, the one that truly decides if you win or lose, is the battle happening in your brain. This is the arena where the game is decided, long before you ever click that buy or sell button. And this slide right here, this perfectly frames the conflict. On one side, you've got the big institutions. They're running on pure, cold, algorithmic discipline. There are no feelings, no gut instincts, just hard math, probabilities, and rules. And on the other side, well, there's you, the retail trader, powered by millions of years of evolution. You're running on a biological impulse that, frankly, just isn't wired for the weird world of modern financial markets. So let's get specific. In this battle, your brain has 4 major weaknesses. We're going to call them your 4 psychological killers, and they're responsible for almost all of the losses we see. Let's break them down one by one. First up is the gambler's fallacy. We have all felt this one. You see a stock that's just been going up and up and up, and your brain just starts screaming, it can't possibly keep going. A drop is due to happen. And this feeling, this fallacy, it pushes traders to bet against a powerful trend, fighting the exact momentum that the institutions are programmed to ride. It's a perfect example of our gut feelings leading us straight off a cliff. Now, this second killer isn't a feeling. It's a mathematical certainty, theta decay. The easiest way to think about an option is to see it as a perishable asset, kind of like an ice cube on a hot day. Every single minute that ticks by, its value is quietly melting away. So if you're holding an option, you're not just fighting against the market's direction, you are literally fighting against the relentless march of time itself. And this brings us to killer number 3. And honestly, this one is a monster. It's called loss aversion. This is baked right into our DNA. We are hardwired as human beings to avoid pain much more strongly than we seek out pleasure. In trading, this bias is absolutely fatal, and the next slide is going to show you exactly why. Just look at this chart. Gaining 10,000 rupees feels pretty good, right? But losing that same 10,000, whoa, psychologically, that hurts about twice as much. And this crazy imbalance makes us do terrible things with our money. It's why we cut our winning trades short. We just want to grab that little hit of joy before it disappears. And it's why we let our losing trades run on, hoping they'll turn around, just so we can avoid feeling that double dose of pain. And when that pain finally becomes too much, when you take that big loss, it triggers the final and by far the most dangerous killer of them all, revenge trading. This is a full-on emotional hijack. Your brain's fear center, the amygdala, it just takes over. All your logic, all your strategy, it goes right out the window. Your only mission is to get your money back, right now at any cost. And the damage is just catastrophic. Data from last year showed that revenge trading, all on its own, was responsible for 40% of all retail account liquidations. Let me see that again. Nearly half of all blown-up accounts were caused by this one single emotional impulse. It is, without a doubt, the fastest way to lose everything. And, you know, as if fighting your own brain wasn't tough enough, you've also got the systemic costs. Things like slippage and brokerage fees can easily skim another 15 to 20% right off the top of any potential profits you might manage to make. The odds are just truly stacked against you from every angle. So, after hearing all that, you might be thinking, is it hopeless? And the answer is absolutely not. But to have a chance, you have to stop fighting a biological battle you can't win and start approaching this completely differently. You have to take the path to survival, and that means treating trading like a cold, calculated business. So how do you actually fight back? The secret is that successful traders use rules to defeat their impulses. It comes down to three things. One, they treat it like a business, with a plan and processes, not like a slot machine at a casino. Two, they only take trades that have what's called a positive expectancy, which means they have a proven statistical edge over time. And three, they live and die by an ironclad risk management rule, like never risking more than 1% of their capital on a single trade. These aren't just suggestions, okay? These are the absolute pillars of survival. Because if you don't have these rules, if you're just trading based on hunches, hope, and gut feelings, then you're not really a trader at all. You are, as the pros like to say, simply a voluntary taxpayer to the market makers. You are providing the liquidity that fuels their disciplined algorithmic profits. And that really brings us to the final and most important question, a question you have to ask yourself. When you really look at your own trading, your decisions, and your results, which one are you?
Let's discuss that in the comments section. And as always, thanks for watching 1 Lakhs Live. Subscribe for more.